Welcome everybody. Today is December 7th, 2017, as we start to sneak up on the end of the year. Again, I wanted to start off with a trading plan. Literally, this is our entire trading plan on one page. It's very simple, it's very easy to learn. To summarize our trading plan, this is it. We'll do trend trades if our 14-2 triggers are crossed with us. Price makes a retracement to touch fibs and or mid bands, and our fib to fib oscillator location is in the lower 25% for longs, upper 25% for shorts. And if we were lucky enough to reach multiple time frame Fibonacci support or resistance, and the trigger lines don't break through, we're going to use a market flow entry pattern to get us in. So again, this is a summarized version and what we use during our class to just kind of copy paste on the chart and see where the rules are met. A couple of key things that we went through today on our trend trades. Number one, after you do a trend trade, the first trend trade is pretty easy to see. Everything lines up nice and easy. If you do a second trend trade, let me just show you what this looks like. And this is a really good lesson learned today. Obviously, if we're making a strong move, we're going to do one more trend trade short. If our price and synthetic triggers continue to make a more move to the downside or upside, whichever way it's going, we'll do one more short. So we use that lesson a lot in class today. The other lesson that you're going to see here shortly in the video is this lesson. Again, if a market makes a strong move, we're going to do one more trend trade short. And if we get back to, double top, double bottom, fibs, whatever the case is, if the synthetic triggers don't make a move to the downside, no more short trades. And usually we end up going the other way, or depending on what the areas look like, we may do another short trade from over here. So what I'm going to do is show you guys all of the trades from the day today. Again, just keeping in mind, we're going to do a real simple version. Number one, we'll get in at multiple time frame fibs with a reversal bar in our market flow, or trend trades at the best spot if we can get them. If not, we'll use our market flow reversal bar as an entry. All right, so again, I don't want to necessarily go through and do every trade. Obviously from about 7 o'clock this morning through lunchtime, actually through about right here on this last trade. These are all ones that we talked about and traders did during class. So let's just go through the rules really quick and just, again, I just kind of put together a short little summary for the day. Since early morning, obviously about 2 o'clock in the morning, we've had 9 trades total that fit the rules for our trading plan. Either multiple time frame fibs, which I've represented with yellow boxes, and there's 3 of them, and then 6 trend trade rule totals that are represented by white circles. So again, just to kind of go through, our rules, it's pretty easy to see if you reach multiple Fibonacci support, which, very clearly we have the edge of our multiple time frame Fibonacci support down here. We're going to be looking for a counter trend trade. Now the market went from about 55.80 all the way up to 56.20. So literally there was $400 worth of potential in there. We're going to count that for a total of $200 per contract, assuming most people trade 2 contracts. So, once you get your $400 out of that trade, that's it. We're not going to talk about holding for more. So very simple rules that most people will use. They'll take 10 ticks on half, get to break even, and then take 20 ticks on the other half. As the day traded and progressed, this is where, again, early morning, trigger lines breaking through our fibs, and again, our trend trade rules. And again, I just want you to remember how simple they are. 14-2 triggers crossed with us. Price pulls back to the Fibonacci lines in midband and or midbands, and the fib to fib location is in the right spot. So again, you can see triggers are up, pull back to our midband, and we get a trend trade long here. Most people will use, the market flow as an entry signal. Usually, at the edges, you can be a little more assertive, multiple time frame fibs. But for sure, when your small triggers are above your synthetic triggers, you can be a little more assertive. So this trade, we only accounted for 10 ticks positive and then a +1. Then you can see the market traded down a little bit lower to the edge of multiple time frame support. And, again, remember our rules are the triggers can't break below. So as the triggers broke below, if you wait, if you got in, you were still fine. You never got stopped out. But if you got a second opportunity at that same trade where the small triggers rolled up, synthetic triggers were up, and right at the edge of those multiple time frame fibs, we had a perfect market flow signal to take us to the long side right there. Easily 20 ticks on that trade. Now, remember the rule that we talked about our synthetic triggers making a move. Well, you can see here small triggers got above our synthetic triggers, and we again want to buy mid bands and fibs. And again, I didn't, overdo this too much, but every trend trade had our fib to fib oscillator in the lower 25%. So you can see this one went up and then made a little retracement where you could try your stop, and then basically you got your 10 and 20 ticks out of that one. Now, simple rules yet again. As long as we make a strong push and your synthetic triggers make a push up, we're going to do another trend trade. So as we pull back to the mid band, again, a reversal bar, a signal on your market flow to get you long here. Again, 10 and 20 ticks to be had on that trade. And then as we traded up towards 56.50, again, kind of a round number, so people watch that number. But because the strong triggers were up, we got another trend trade. And essentially, we made a double top and a reversal. So, traditionally, that will be our signal to not do trend trades anymore from the mid band. And if possible, if we hit our 165 EMA moving average, we can do a trade from there. So right here was the place where we talked about in our classroom taking another trade. So again, this trade made 10 and then +1. This trade made 20. And this was really our target up here at 56.58. And you can see what happened. Our trigger lines broke through the fibs, and we left the class with this circle actually saying that we would do one more trend trade because of the trigger line movement to the upside from around the 55 area with a target up towards 56.75 for another 20 ticks. And then, obviously you can see what happened. We got the edge of multiple time frame Fibonacci resistance. None of our trigger lines broke through, which if you are obviously trading our software and looking to go the other way, that's your first signal to go to the short side. So again, just to recap, 9 trades total, 3 inside of the yellow boxes that were multiple time frame Fibonacci's without the trigger lines breaking through. And then the white circles are all pullbacks to mid bands and or fibs with our fib to fib oscillator in the right spot after a strong synthetic trigger line move to the upside. So that, that move just helps you build your confidence. So, again, you may not be up at 2 a.m. trading all the way until 2 p.m. Would make for a very long trading day, but very realistically from 8 o'clock in the morning until noon or shortly thereafter, you had the opportunity for 1, 2, 3, 4, 5, 6 really good trades in crude oil. So today there was actually 9 trades potential per our trading plan rules in crude oil. 6 trades, trend trades, 4, 10, and 20 tick winners. 2 of the trades didn't follow through, so they only got a 10 and a +1 tick winner. And if you were trading a 2-lot, which is $2,000 to trade a 2-lot, but realistically, $8,000 to $10,000 in your trading account, the potential was there for, a little over $3,000 today on crude oil alone. Gold, whole nother story. Lots of potential on the gold as well. Our rules are the same every day. Multiple time frame fibs, or if our synthetic triggers make a strong move, we do a trend trade. That's it. As long as you keep it very simple and very easy, and really, not to diminish what we do, but to keep it really simple. Trend trade long or short, or the edge of multiple time frame Fibonacci without the trigger lines breaking through, and you've got yourself a really, really solid, really simple, and really powerful and potentially very profitable trading plan for yourself. Have a great day, and I look forward to seeing everybody in the room tomorrow.